Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money games the big companies play, and today we are diving into a filing that looks like a major shakeup for CompoSecure, maybe even a whole new identity. Alright, so CompoSecure Inc., which might soon be known as GPGI Incorporated, has just filed a Form 8. That essentially announces a big old merger and a bunch of related deals. You see, on the 12th of January 2026, the company completed what they call a significant combination with Husky Technologies Limited. And get this, the price tag was a cool $688.7 million in cash plus a hefty chunk of CompoSecure's own stock, a whopping 4,978,334 shares. This was a big deal, folks, and it wasn't the only thing happening. At the same time, they also wrapped up a private placement, meaning they sold more stock, this time to something called PIPE investors for an additional $1.96 billion. Talk about a cash infusion that really changes their financial picture overnight. Now, with all these new deals comes new agreements. One key. One is an investor rights agreement with PE Titan CS Holdings, LP and affiliate of Platinum Equity. This agreement gives PE Titan some serious say in the company's direction. They get to nominate board members, as long as they hold a significant portion of the company's stock, and get this, they are allowed to freely pursue any business opportunity. That is a pretty open clause to have. Then there is the registration rights agreement. This basically means CompoSecure has to file paperwork with the SEC so that these investors can resell their shares. Later on, it's a standard part of these big deals to make sure investors can cash out when they want to. Things get really interesting with the management agreement between Husky Holdings and Resolute Holdings Management Inc. This is where the day-to-day operations and strategy of the newly combined Husky business will be managed. CompoSecure is agreeing to pay Resolute Holdings a quarterly management fee of 2.5% of Husky Holdings' last 12 months adjusted EBITDA, that is a percentage of their profits. Essentially, so Resolute Holdings is going to be paid based on how well Husky does, which is a pretty direct incentive. This management agreement is for an initial 10-year term, and then it automatically renews for another 10 years unless someone decides to call it quits. There are also provisions for termination fees, which could be paid in cash or stock. This shows a long-term commitment and a deep integration of management styles. Now, all this activity means some old agreements have to go away. Went the fourth amended and restated credit agreement from August 2024. That was a $330 million credit facility, comprising a term loan and a revolving credit line. They paid off all the loans and ended those credit commitments. That is a clean slate on that front. But the story doesn't end there. CompoSecure is also taking on a massive amount of Husky's existing debt. This includes over $1.7 billion under Husky's term loan facility, and another $350 million from a delayed draw term loan facility. Plus, they are taking on Husky's revolving credit facility, which has $50 million outstanding, and as if that wasn't enough, they are also assuming $1 billion of Husky's senior secured notes due in 2029. This is a huge financial undertaking. CompoSecure is already working to refinance all this Husky debt, and they plan to do it really soon, like the 14th of January 2026 soon. And to add another layer of action, Husky is even planning to redeem all of those senior secured notes on the 13th of January 2026. This is a very active period of financial maneuvering. Remember those shares issued in the merger and the private placement? Well, they weren't registered with the Securities Act of Itenjo by Senesen. This means they were sold under specific exemptions like Section C of the Act or Regulation D and S. These are typically for transactions not involving a public offering. So it's not like you could just go buy them on the open market at that moment. Now, for a bit of a behind-the-scenes shift, on the 9th of January 2026, CompoSecure decided to part ways with their auditors Grant Thornton LLP. They approved the dismissal and appointed Ernst & Young LLP, or E, to take over for the fiscal year ending the 31st of December 2026. It is important to note that NT Thornton is still finishing up their audit for the 2025 fiscal year. This is a pretty common move when there is a big change in a company like a merger or acquisition. The filing emphasizes that there were no major disagreements or issues with Grant Thornton during their tenure, which is good to hear. Always important to have a clean break with your accounting firm. In terms of leadership, CompoSecure welcomed two new directors to their board, Louis Sampson and Dilara Zarabi. They were appointed right after the transaction closed. Sampson will serve as a Class I director until the 2028 annual meeting, and Zarabi as a Class III director until the 2027 meeting. Both were appointed based on the investor rights agreement we talked about earlier. Louis Sampson is a president at Platinum Equity, the same firm that is a major player in this deal. He's been with them since 2007 and has a lot of experience in mergers and acquisitions. Dilara Zarabi is also a managing director at Platinum Equity, and she's been there since 2013, focusing on deal execution and portfolio company oversight. These are key. appointments tied directly to the new ownership structure. And here is the big reveal. Perhaps the most significant change mentioned is that the company's board of directors approved a name change from CompoSecure Incorporated to GPGI. Incorporated, this change is set to become official on the 22nd of January 2026. So CompoSecure, as we know, it is essentially going away and a new entity, GPGI Incorporated, is emerging. The company also issued a press release on the 12th of January 2026 announcing this whole merger completion and the intention to change their corporate name. This is all about signaling to the market that a new chapter is beginning. Now we get to the really juicy stuff, the financial details. The filing includes financial statements and pro forma information for the newly combined entity. While we don't have the full real-time financials yet from the 12th of January, these exhibits give us a peek into the combined company's health. We saw that CompoSecure itself had about 680. 8.7 million in cash and stock going into the deal. Then they raised another 1.96 billion in cash from the PIPE investors, that is over $2.5 billion in new capital, added to the balance sheet almost overnight. Looking at the details in Exhibit 99.2 and 99.3, which referred to Husky's financial statements before the merger, we can see the scale of the business CompoSecure is effectively buying into Husky had significant assets and liabilities. Before the merger, Husky's own long-term debt was substantial, adding considerably to the combined entity's balance sheet after the transaction. What is crucial is how CompoSecure will manage this larger debt load and generate enough earnings to service it. Exhibit 99.4 provides the unaudited pro forma financial statements of CompoSecure. Incorporated, they show the combined company's hypothetical financial position and performance as if the merger had happened at an earlier date. These pro forma numbers are key to understanding the immediate impact of the transaction on the company's revenue and profit. And finally, we see the consent of Ernst & Young LLP, their new auditors. This solidifies the change in accounting firms and their readiness to audit the new combined entity. So what does this all mean for CompoSecure, which is now GPGI Incorporated? This is a massive transformation. They've gone from being CompoSecure to acquiring a larger entity, Husky Technologies Limited, using significant financial leverage and welcoming new major investors and management influence. Platinum Equity is clearly a dominant force here. The company's direction is now heavily influenced by their strategy. The name change to GPGI Incorporated signals a definitive break from the past and a move towards a new corporate identity. While the infusion of cash is substantial, the assumption of Husky's considerable debt is a major risk that will need careful management. The success of this merger hinges on the combined entity's ability to generate strong cash flows to both service the debt and fund future growth. The appointment of new directors and the Ment agreement with Resolute Holdings indicate a strategic shift and a concentration of management power. What is your take on this audacious move by CompoSecure to completely rebrand and take on so much debt? Let us know in the comments below. Did they make a smart bet, or is this a risky gamble? If you found this deep dive helpful, please give this video a thumbs up. And subscribe for more straight talking corporate analysis, and remember to join our Discord community, linked in the description, for even more in-depth discussions. Thanks for watching, and we'll see you in the next episode.